please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so the thing is that, I mean, if you're a little greedy, if you're a greedy bull, you'd say this has stalled a little bit, the move on the Nifty at least. 10,850 in this market's not been able to touch 10,860 so far. So you can see that sluggishness kind of creeping in. No such problems for the mid-cap market. That index is just roaring away with gains of 1.5%. Ashwani, what now? And what are the calls? I'm guessing you're going with some buys for the last half hour into tomorrow?
Well, you know, one issue is the level. The other issue is that, you know, the market breadth, how many sectors are higher, how strong stocks are moving up. If you look at that aspect, then, you know, it appears that maybe it's a matter of time before, you know, these levels are taken out. So for the first time in like 7-8 weeks, now we are willing to carry positions overnight, because I expect that if you have another 50-point gap up tomorrow morning, then, you know, all resistances tend to get taken out with gaps. And as we speak, in the last hour or so, FMCG has started to come back. So HUL, Britannia, etc. are now moving back higher. Metals are coming back. So there are way too many legs on the market for it to totally turn. So that way, you know, you can right now get into a Bata. That's a buy with a stop of 836, target of 860. IGL is a buy with a stop of 262, target of 277. And HUL is a buy with a stop of 1670, target of 1720.
Mitesh, same question to you.
Yeah, I have two buys. One is Kotak Bank. I think that's a BTST kind of a trade. Take a very tight stop at 1374. Look for targets of 1400 to about 1405. And a mild short-term buy on Reliance, which appears to be again getting back into some kind of an up-move zone. Could retest the recent highs of 1020.25. So that's a buy with that kind of a target and a stop at about 986.
Okay. Meraboon, your thoughts on Reliance Industries? Do you see it climbing back above the 1,000 mark again with conviction, because it's resumed its rally after taking, you know, a couple of days off?
Well, Reliance, along with maybe 7 other stocks, including the Infosys, the TCS, the HDFC Bank, Kotak Bank, has possibly kept the Nifty at the level at which it is. And if actually, what I suggested earlier to Prashant, if actually we are going to possibly see the probability of the Nifty approaching a new high, or actually making a new high, I certainly believe Reliance could be a stock which could possibly be rolling closer to 1100 rupees if we are going to discuss that level. So at 995, 990, 985, if an investor asks me that should I be selling off a Reliance right now or taking some money off the table, my answer would be no. Because I certainly believe Reliance, I don't see it coming down sharply for any reason as such. And ultimately, at the end of it all, it should continue to trend on the upside, not on the downside. So I think Reliance is the stock which I would advise investors to continue to hold on.
Meraboon, just 2 more names. One is, if you can, I don't know if you have a comment to offer on Indigo at about 1,080 odd rupees. High was 1,500 plus.
I would say that even a SpiceJet, IndiGoJet, quite a few of us, and I was not a part of it fortunately, but quite a few of us at levels much higher were gung-ho about it. Oil went up, people started avoiding the stocks. I think at the present level, there could be an opportunity, Prashant. Now, whether you buy an Indigo or you buy something like a Jet, which is possibly at last 12 months or 18 months lows, the choices, the investors. I also believe SpiceJet at the present level could offer an opportunity. But at the end of it all, despite knowing what is happening to air traffic and being positive on it, and I feel this will continue to grow, the point is, do I buy the stock as an investment bet? There I would like to avoid, and I would possibly say trading on the long side, buying it for the shorter term would be possibly more prudent than taking a call for the longer term right now, because the clear case in favor of them, like you rightly mentioned, Prashant, is the price at which they are. So at the present levels, despite oil possibly not having topped out, that's my belief, I still believe that at the levels at which they are, some of this all the 3 airline stocks provide a decent trading opportunity. Indigo would be definitely my first choice right now, just because the price at which it is, my comfort level is much higher than what it was when the price was 1250, 1300 odd.
Okay, the other sector, you said you're not sure whether it's a sort of hold and forget, hold and buy kind of thing. The other one is construction, and especially names like Dilip Bilkon, etc., which have again fallen a long way off. Now, that space, I don't think is, over the last 10, 15 years, if you look at these stocks, they've really been consistent wealth creators. I mean, you trade them, they've gone through booms and busts, but they've not really been compounders. I don't think even one of them has been a compounder. But just because it's, again, it's a function of the level and the cycle they're in. High was 1250, it fell to about 600 back at about 700. Opportunity here?
I think so. I think I would say that there were reasons why the stock came down, and suddenly people want to exit. And that is what I was referring to, the impact cost. Nobody wanted to buy. The fall was much sharper, and possibly 650, 700 could be a level at which investors possibly may, or traders definitely will possibly see a higher level. I'm not ruling it out. And this space, if you ask me, Prashant, I think there are reasons why the stocks refused to go up a few years ago. There's a problem in the balance sheet of most of these companies, and I personally believe Dilip Bilkon, despite some controversy here and there in the recent past, I think provides a decent buying opportunity. With another name which I personally like with clear disclosure is KNR Construction, which also I believe has come down a little bit too sharply. The company is doing reasonably well, and I think that also provides a decent opportunity. But if somebody who wants to buy for the longer term because of construction, and ahead of elections always this activity picks up construction and infrastructure, I think the best bet undoubtedly would be Larsen & Toubro. Just buy it and forget it from the longer term angle. But from the trading angle, I think KNR Construction, even a Dilip Bilkon, could provide a decent buying opportunity for a 5, 10, 15% upside from the present levels. Okay,
the stock that we really need to focus on right now is the one that's already on your ticker screen. 9% move on Hexaware, and literally a vertical surge in the last 3-4 minutes of trade. That is what has happened to this stock. There are other mid-cap IT names that are also moving. Pull up NIIT Tech. There's a bit of a move that's building now. There's a 3% up move on NIIT Tech. Four Sources in the green. Tata Elxsi, Mindtree is moving higher. So the whole pack is moving higher. But the moves are most pronounced on Mindtree, Hexaware, and NIIT Tech. Mitesh, these are old favorites. From an investment standpoint as well as I guess from a trading standpoint. What do you make of these moves on mid-cap IT now?
See, between the lot, I think, and while the move is clearly there, and most of these stocks have been maintaining an uptrend, I think the strongest breakout appears to be on the chart of Hexaware. I think, getting past these levels of 468, 470 means that the stock is possibly heading towards 520, 525. I do like NIIT Tech as well, but it needs to start getting past levels of 1120, 1130, where a lot of congestion took place a couple of weeks back. So I think only about 1130 would I consider buying into NIIT Tech, but right now, Hexaware could be a good choice. It's run up a bit, so maybe on a 5, 6 point, 7 point kind of a dip would be a good entry point. But I think it's heading towards 520, 525.
Even, by the way, Hexaware Surabhi is up 43, 44% for the year, for the year so far.
Yeah.
But even 43, 44% in a year like this from an IT stock pales in comparison to what some of the other IT stocks have done. NIIT Tech, I think, is up 70%. First Source is up, just from the beginning of this year, First Source is up 70. Mindtree is up about 60% or so.
Yeah.
You look at Emphasis, KPIT, and then you get to the Hexaware 40, 44% average return kind of.
Average return.
L&T Infotech, it's not a small name, it's up 50%. So, as I said, 22 stocks have gained over 30% this year, and 11 of them have been IT stocks. So it tells you the story.
Oh, absolutely. So before we let you go, Mehraboon, now the sector's already run up. People are still very excited. We're getting into earnings. So there's obviously that risk of disappointment that you may run, in case there is a quarterly miss by any of these companies. What would you keep in your portfolio from mid-cap tech and, of course, your view on TCS itself reporting tomorrow?
I think I really appreciate the discussion which you all were having among yourselves, and let's be honest about it that quite a few of the IT names, including the frontline names, have given fairly decent returns, certainly on a relative basis and possibly on an absolute basis also to quite a few investors. In fact, it has protected the portfolios of many investors, be it a TCS or be it an Infosys, which are all run up. I think in the mid-cap IT segment, I can confidently state, and I'm sticking my neck out to say that the best performing company in terms of margins, in terms of profitability in 2018 should be Emphasis. Now, I have tracked this company and I've recommended this stock in the past, and something tells me that this stock should be a 1250 to 1300 rupee stock in 2018 alone. And I think it could come much earlier because I'm expecting very decent numbers from it. Apart from this, two other stocks which I've been very vocal about is Stake Solutions and First Source Limited, which I have recommended in the past quite a few times on your channel. I think the way they have performed, they may not go up in a hurry anymore. But these are stocks which should be at least 20–30% higher in 2018 itself. So they may not run away tomorrow or day after, but at the end of it all, these are the type of stocks. So well-researched stocks, companies which you understand, I still believe there are a whole lot of opportunities over here. So one frontline stock should be in an investor's portfolio in the IT segment, despite the relative outperformance which IT has given. And among the mid-caps, my personal choice would be Emphasis, Stake Solutions, and First Source Limited.
Marabun, just one last comment from you before we take that break. Any doublers from here? Because that kind of is the test for any investment thesis in India. Which one can double? Yeah. I mean, something across stocks you track, what are you bullish on in a very absolute way, not relative returns?
Well, feel nice to say that First Source and Stake Solutions, I think last 6 months have recommended, and possibly both have nearly doubled. I think, but at the present level, the way the market is right now, a whole lot of events are going to unfold. I think 1.5, 2 months later, you will discuss, and I will discuss possibly what is going to happen to Rajasthan or what is going to happen to Madhya Pradesh, and 4 months later, everybody will start talking about the national elections. We have our own global concerns here, and so it's not going to be very easy market to people to play one way. So this is a market in which whole lot of opportunities will keep on coming, and investors should just continue to go on buying into whenever there are sharp dips in good quality stocks. Like I was telling you about Sterlite, my logic is very simple, Prashant. If I like the stock at 120, which I recommended, and I did not mind holding on at 410, what was I doing when it came down to 280 rupees? Was I worried it will go down to 230, 240? And if it is to go to 230, 240 in line with the overall market, I should be confident that if I never sold at 400, 400 will certainly come. So if the upside is more than the downside, you need to go and buy into the stock. So similarly, a First Source Limited, recommended 6 months, a few months, 4–5 months ago at 40, 42 rupees on this channel. Went to 83. If it comes to at 60, 65, I'm going to buy into it because I don't see 83 being crossed. I see even a 3-figure coming for the stock over the next 12 to 18 months, and that is what the strategy which investors should be adopting in this market. Sharp dips, good performing companies, just go and buy them. Don't try to hazard a guess what's going to happen the next week or the week after that. Just know that the downside from here is a 5–10%, but the upside could be as high as 40–50%.
Okay, Marabun, we'll leave it on that note for this afternoon. Then thank you very much for joining in. Midcap IT is your sector of the afternoon. We'll take a break on that note. Come back with the market shows on the other side. What a move on some stocks in the mid-cap market. We are still catching our breath on something like Hexaware. That stock's up 13%, by the way, and therefore just can't get tired of repeating. Yeah, that's the kind of move that we're talking about. Still counting that appreciation on Hexaware. Look at JK Tyre. Balkrishna Industries was anyway up and about. Let's pull up some of the tyre stocks as well. Big spike on JK Tyre. Let's see if this is being witnessed on MRF, on CEAT, on some of the others. Balkrishna was always up and about throughout the second half of trade. But yeah, no, it seems to be JK Tyre alone for the timing. That's a massive move on JK Tyre. We have Mayuresh Joshi also joining into the conversation. Mayuresh, what thoughts on Hexaware?
I think stupendous move. Don't know the reason for that should be at this point of time. But again, I think your conversation with Prashant and the expectations from IT as a sector as a whole, I think in terms of revenue expectations, both in constant currency and dollar terms, I think a large part of the IT companies with discretionary spending coming back in key verticals like retail, manufacturing, some green shoots being witnessed in BFSI. I think the mid-cap space where I think niche services stroke products are getting offered, and where again the client wins specifically in those buckets of $1 million or dollars, along with execution specifically in terms of the digital offerings. I think the revenue growth, as I said, should be quite reasonable going forward. In terms of specific IT companies probably be getting hit in terms of both visa costs as well as wage hikes. I think this quarter might be forgiven for those aspects in terms of the EBIT and the EBITDA margin compression. But a large element in terms of earnings growth probably still persists with the sector as a whole. So in the past, I think we've liked stocks like Mindtree, we've liked stocks like Ascent. The sector generally has done well. But again, I think on a bottom-up approach, specifically within this mid-cap IT theme, nucleus software is something that we'll continue to pursue and like at every level going forward. I think the kind of capex that they've probably done in terms of ramping up its FinOne new suite platform, a large element of those expenses are behind them. As NBFCs and cloud computing catches steam, it just contributes around 5% odd. That should improve significantly. And the expectations of cash flow, specifically in terms of improvement in earnings dynamics, should probably get reflected in its intrinsic value. So again, I think nucleus software within the mid-cap IT space is something that I like. I'm not really sure on the move of Hexaware at this point of time.
Fair enough. But there has been a sharp divergence in performance between mid-cap and large-cap IT. Mayuresh, mid-caps have done extremely growth. I mean, look at L&T Infotech and their commentary in terms of growth. TCS would do well to grow at 10-11%, whereas these guys are talking about closer to 20%. Some of the mid-cap names.
Well, yes, again, I think the management commentary, Prashants, have been a testimony in terms of the rise for the mid-cap IT outperformance compared to the large cap. Again, in terms of constant currency guidance given, I think a lot of mid-cap names have probably given double-digit guidance. A few of the top-tier names have probably given higher single-digit guidance on that front. So again, I think considering the base out of which the large-tier names are probably operating out of at this point of time, and their client size and the execution parameters that they need probably to disappear as well, I think a lot of these mid-cap IT companies are structurally positioned very well in terms of niche offerings, as I said. So a large element in terms of Cyient, for example, I think offering its airline products, you've probably got or catering to the airline industry as a whole. As I said, for Nucleus, I think catering to the NBFC space, which is expected to grow significantly in terms of cloud computing dynamics. What you're probably talking about, the mid-cap guy is actually doing reasonably well, both in terms of dollar revenues as well as constant currency revenues, and probably outperforming the large cap names in that front is probably something which has led to the outperformance. But nothing can take away the quality that large cap names can probably deliver on the base that they've been growing, both in terms of revenue accretion that they can probably bring about, and even in terms of their dividend distribution or the policy of returning value back to shareholders. I think time and again, I think the rhetoric has been repeated, not just by Infosys, TCS, HCL Tech in terms of buybacks or dividends. So I think valuation matrix-wise, I think one needs to really follow a bottom-up approach. I think the whole recommendations probably still continue in large-cap names, but we remain specific within the mid-cap, please.
Okay, moves have been stunning. Counting a KPIT Tech in this mid-cap IT move as well. Even Infosys has managed to move the needle a little bit for itself. TCS is still negative 1.5% down. That's the story of technology stocks this afternoon. What a move in mid-cap IT. We'll take a break, come back, last couple of minutes of Monday trade left.
Okay, 82 holding on the Nifty, 10,855 is where we're at. I mean, I think as Ashwani was pointing out earlier, it's not just the levels themselves, but the way the market is moving and the breadth and everything else, how many sectors are participating. And I mean, actually, many sectors are participating. The top gain, I mean, sector-wise gainers are energy, PSU banks, metals, pharmaceuticals, and infrastructure. And I mean, I don't think there is one sector which is down. I mean, there's a bunch. Useful to look at that sometimes. Just take a look at what's happening as far as losers. I mean, actually, just a few stocks. AU Bank, AU Small Finance Bank saw that sharp correction on Friday, but it recovered quite a bit. Today, it's down about 7%. I think the lock-in for investors got over today, was it? So that's down 7%. BEL, that's Bharat Electronics, saw a large move on Friday. It's down about 2 1/3%. Cement stocks all look very good. Late last week, Ultratech is down 1.5%, but there isn't very much. I mean, in any case, if you want to look at losers with large volumes, you'd sort of struggle beyond a point. But you look at gainers with very strong volumes, and there is quite a bit. Can't get away from Hexaware. Look at that now. We spotted that at 8%. Before we took that break, we sort of pointed to it at what, 13-14%. It's up 19% now, and it's sort of kept on going. 534 on cash and 483 on futures. There is, I don't think there is any corporate action or something pending, but there is a very large difference between the cash and the futures price. Of course, if those values are correct, and I think those values are correct. So that's going, and going super strong even as we look at that. And it only started the move in the last 20-25 minutes or so. Some of the other names we've been already discussing like V-Mart, HEG, Mahindra Finance, Karnataka Bank, and so on and so forth. Anything else, Ruby?
No, it's just this mid-cap IT rally, particularly Hexaware, that continues to take my breath away. I mean, Prashant, really, this has been one stunner. Ashwani, I want to get you in on this as well. I mean, it's not a surprise. These stocks are anyway trader favorite names. But 20%, there you go. Now you've got a circuit on that stock, even not a circuit, 20% temporary, I think, halt on that stock, even as we're speaking. Don't know where this came from, but what does one do with it now?
Take half your profits, take the other half if it goes up another 10%. See, these rallies have not started today. So becoming overexcited with 20% will lead you into trouble. Tomorrow, if TCS results are lukewarm, this 20% will get taken very easily. So try to buy when things dip in between, when it comes with results, sometimes it falls 15%. Those are the sort of days you buy. This is the day you get out because the stock is now way away from its 200-day moving average, which is 370. That generally is a fairly overbought situation.
That's not, Prashant, that's not looking like a very regular move. This is not how these kind of stocks typically move, It's reminding me of a reverse chart of stocks like Manpasan. When they start falling, there's just no stopping the fall. And I mean, I don't remember seeing a rally like this where a stock has moved just non-stop from about 6-7% when, I first looked at it. Yeah. And now it's 23 and just going up in the last moments as well.
That's not supposed to happen. I mean, let's put it that way. But yeah, it is. So 23% on Hexaware. That's a pretty large move. I mean, it's certainly nothing to do. I don't think it's anything to do with that TCS will report great set of numbers. So let's buy Hexaware. Is there any, 20%, 22%, the way it's gone? I mean, it's been bid up and people have bought it even as the stock has been rising and buying at higher and higher levels. So maybe there is some news flow which I guess at some point will hit the screens. But for now, we're just looking at the stock in amazement. I guess can't do anything else at this point. I mean, basically the gains now on Hexaware, today's gains take the YTD gains in the 60% odd region. 60% from the beginning of, 2018. But we've got NIIT Tech still number one, pole position, 70%. But this is catching up fast. We just sort of closing market closing approaching pretty fast. So let's look at markets in their entirety. 80 points. So markets didn't really build on gains in the second half of the last 1 hour. We started with 75, 76 odd points or so, and we're closing around that 76, 77 points now. 10,849 is where we are at. 3 quarters higher. Mid caps do a lot better, 1.7 higher. I think the small cap index also in that 1.5% plus kind of region. Bank Nifty up about 0.9%. So, I mean, slightly better than the Nifty, but not vastly better. Advanced decline, 1,470 stocks higher compared to about 637 stocks lower. So that's about 2.3:1 advanced decline on the NSE. And as I said, sectorally, energy, public sector banks and metals sort of led the gains as far as larger indices are concerned. Asian Paints, Yes Bank, Dr. Reddy's, HCL Tech, Axis Bank, Cipla, HPCL and Reliance Industries are the top gainers as far as the Nifty is concerned. And there are more. I mean, it's a long list today. And again, I mean, losers, there are about 10 losers or so on the Nifty. Ultratech, TCS, Z, Ambuja Cement, HDFC are the losers. But you got only 2, that is Ultratech and TCS, which are down, you'd say meaningfully, about 1.5% cuts there. Rest are all losses under 1% each. So that is the large cap sort of list of stocks for you. So we got mid caps.
Mid caps, well, what do you say? It's been a good day for mid caps. 300 points up on the index. And now when I talk about the winners, obviously top honors have to go to Hexaware. That stock has just not stopped at all. In fact, let's check the final count. 22-23%. That's what we're really talking about on that one mover. It had good company in the form of an NIIT Tech, Tata Elxsi, First Source. Almost all of its peers moved, but the moves were nowhere close to as breathtaking as what we've seen on Hexaware. So generally, IT seeing a lot of flurry. If I move on, Sterlite Technologies also looking good with a 9% up move as we're counting down. V-Mart on that upgrade that came from Jefferies. They're quite bullish on the stock, about 7-8% up, actually 10% up on V-Mart towards the close. Some of the consumption names like Tata Global and Jubilant Foodworks have had a good session. These are stocks that are up between 2.5-3%, depending on which one you're looking at. Then you had the likes of Max Financial, about 8% on the higher side. Speaking of financials, M&M Finance had a decent session as well. RBL Bank from the broader market managed a good close for itself as well. So smart buying on a couple of these names. Gas stocks, City Gas Distribution plays. Smart moves in the last hour that you really couldn't ignore. Let's bring up IGL and MGL. Those are the stocks that I'm talking about, between 3 and 4%, depending on which stock you're picking up. Granules was a mover as well, about 7-8% up on Granules. On the F&O side of the screens, you had a lot of movers and shakers. Karnataka Bank, for instance, 7% on the higher side. SRF, 4 to 5% on the upside as well. JP Associates, 4% up. So all in all, it's been a strong day. Page Industries from the consumers, 3.5% up on that stock as well. On the downside, the biggest disappointment of the day would have to be AU Small Finance Bank as the lock-in after the IPOs ended. 6.5% down. Den Networks, no let up in the selling. Again, about a 5% down move today. Let's bring up Hathway as well. Citi and Hathway, if we can get them up. They were also slightly weak in the session. Hathway managed a bit of a recovery. BEL has lost about 2.5%. Ashok Leyland is down about 1% as well. But really, today's day belongs more to the winners than the losers. Some startling, stunning moves in the last 1 hour, Prashant.
Oh, yeah, absolutely. As you pointed out, Hexaway really led from the front, and a lot of the discussion in the last, 15 minutes or so dominated by that one. Ashwani, you'd still stick with your call that, after a long time, you're feeling comfortable taking longs home.
See, you can carry anything with a 50-70 point stop on the Nifty. If we start, re-entering the range, then obviously that trade is over. I would have liked, more follow through in the second half. But okay, we're closing around the highs of the day. Let's see if there is more to come. But definitely, given the market breadth and, mid caps and large caps and many sectors, I think this is a much more positive close than the quality of positive closes we've had. Possibly Bank Nifty looks a bit stronger, but I would hope that HDFC Bank and ICICI Bank put up some stronger performances. But I think still you would be cautious for the next 30-40 points, because this 4-point higher than the breakout level of 10,850 is not really a very clear situation.
Okay. Mitesh, what would your advice be for tomorrow, given that we've started the week on a very optimistic note?
Yeah, so Surabhi, I think, we've managed to get past 10,850, but we are also very close to that highs of, Karnataka election day, which is 10,920, 935. So I'm not looking at a big upside right now, but clearly trading with positive bias. But if we start getting past 10,930, I think the aggression level can slightly go up. So, we are as of now taking it step by step, but yeah, I think, the market does look clearly positively biased.
Okay. All right, gentlemen, we'll have to wind it up on that note. Thank you very much for being with us today and taking us through market close. We need to take a quick break. On the other side, in a clear win today for the Tata Group, the NCLT has dismissed Cyrus Mistry's petition against the Tatas. We get you all the details when we come back. Welcome back. A clear win today for the Tata Group as the NCLT has dismissed Cyrus Mistry's plea, saying there is no merit in the allegations against Ratan Tata or N. Soonawala, and no mismanagement was found in the Tata Group of companies. Arun Giri and Yash Jain join in with more details. Arun, over to you first.
Wow, what a day here at the NCLT here in Mumbai. It's pouring cats and dogs. These are the traditional Mumbai rains, and what a big verdict by the NCLT on the Tata Mistry boardroom battle. All the arguments, all the allegations leveled by the Cyrus Mistry Group, by Mr. Cyrus Mistry against Tata Sons, against the Tata Group, and personally against Mr. Ratan Tata, all of them have been dismissed. Not one allegation of Mr. Cyrus Mistry has been upheld by the NCLT, and especially the allegation that Mr. Ratan Tata is a super director and who's monitoring the affairs and the working of Tata Sons, that too has been dismissed. I have Yash who will take us through the key observations, the key conclusions of this path-breaking NCLT verdict in the Tata Mistry saga and boardroom battle.
Well, Arun, 4 months of marathon hearing and 4 important points when it comes to the objections which were raised by the Mistry camp. The first one was, of course, turning Tata Sons into a private company from a public company. There, the court has very clearly said that the arguments which have been put restricting that particular move, there is no merit, absolutely no merit in those arguments, and of course it can be turned into a private company from a public company. Second one, allegations with respect to mismanagement when it comes to various Tata Group companies, be it Tata Steel, Tata Motors, Air Asia India, Tata Teleservices. Here very clearly the court saying that the arguments which really were put forth as far as mismanagement,
these were major allegations.
Major allegations. There is no merit in these allegations, and all these allegations have been dismissed. There is no mismanagement which has happened in these groups.
And they dealt with each of those allegations while pronouncing
allegations, exactly. Very categorically the court coming out and, really dismissing all those allegations. The third one, interference. Very importantly, coming from the board and the trustees of Tata Trust, particularly Mr. Ratan Tata, Mr. Soonawala. Here also the court have said that they've been a guiding force when it comes to the decisions taken by the board of various Tata Group companies, and there has been no sort of interference when it comes to the decisions or superseding the board decisions when it comes to all these.
They are not super directors. NCLT has concluded that Mr. Ratan Tata or Mr. Soonawala or both are not super directors.
Exactly. The fourth one, very importantly, and there were very serious arguments on this one. Forceful transfer of equity of about 18%, which is held by the two firms of Cyrus Mistry in Tata Sons. Here,
they wanted the article to be quashed.
Exactly. There also the court coming out and saying that no, there is the objections with respect to that quashing of that particular article, section 75 of Articles of Association, cannot be entertained, and of course it can remain in the way it is right now.
Thanks, Yash. We'll have to wait maybe a few days for a copy of that order. Everyone wants to read every page, every word, what's written in the order, especially the reasoning of the NCLT bench, why they pronounced the verdict the way they did. A clean win for Tata Sons. They would have probably thought in the morning that even if, some of these allegations are dismissed, what if they order some relief to Mr. Mistry? Well, nothing of that sort. It's as clean a win as they could have got at the NCLT. Round 2 at NCLAT very soon.
Okay, all right. That was Arun and Yash raving the rain, getting us all of those inputs. Well, let's listen into a lot of the views that we picked up after this verdict came in today.
We will certainly need to pursue an appeal. This matter is about our worldview of what is good governance versus the other side's worldview of what is good governance. One will have to read the detail in the order to look at what form and manner the contents of the appeal would be. But surely the very fact that these proceedings were pursued was only because this would be taken to its logical end whichever way. We will need to wait for the order. It is, of course, disappointing, but our sight is now on the appeal.
We have all along been saying that there is no merit in those allegations, and there is no substance at all in the allegations he was making against the trust directors or the Tata Sons as such. So in that sense, absolutely, it is a very great vindication of the position. And what the case has done is that it is accepted that this effort all through has been the alignment of Tata Trust and Tata Sons interests. And that has been validated by this judgment.
The wholesale dismissal
But the issue as to whether the conversion of the company into a private company, that will be examined separately by the NCLT under Section 14 of the Companies Act 2013. All the other articles have been upheld, including Article 75, which actually provides and empowers the company to compulsory purchase the shares of shareholders. That article has also been upheld. It is a step forward for the Tatas.
Well, moving on now, India's quest for a dedicated data protection law continues, with the Justice Sri Krishna Committee likely to submit its recommendations for a draft bill before the end of this month. But why do companies care so much about your data, and how are you giving it to them? CNBC TV18's Kevin Lee finds out as a part of our Data Awards, our new special series. Here's the first report.
A decade or so ago, when phones weren't as smart, digital was just a type of watch you wore, these neighborhood stores were Kirana stores that offered a unique service, recharging the balance on your prepaid phones. You'd walk in, finish your shopping, and write down your phone number in a register, and the shop owner would then top up your balance when customer queues thinned. It was a simple two-party agreement. That is, until third parties decided that they wanted in. Intermediaries started buying these registers of phone numbers from shop owners and selling these databases to companies looking to advertise through phone calls and SMSs, and digital targeted advertising was born. While companies did not have a lot of information about the people they were advertising to, they did know that these people had cell phones, which meant access to a certain amount of disposable income. Today, those Kirana stores have been replaced by social media and e-commerce websites, and our many internet accounts have replaced their registers. The only difference is that we are now using our personal data as currency to access these free websites.
There is no free lunch. There's a saying in the world of internet, if you're getting something free of cost, remember you are the product which is being sold.
But when did we go from being the customer to being the product? A few years ago, technology had sufficiently evolved to allow websites to know how many people were actually clicking on an ad and how many were just ignoring them. Gradually, advertisers wanted to pay money based on the number of clicks they were getting, not just how many times their ads were being shown. To ensure that more people were actually clicking on these ads, websites used the data they had collected from users to try and make the ads more relevant, and suddenly, modern advertising became dependent on us moving a mouse pointer and clicking on a screen.
If you take digital, you need engagements, you need clicks. In many cases, they want people to fill up leads. In many cases, they want the people to buy the product. So the thing is, the entire lifetime value of the customer is sort of considered when you invest in digital. The reason for that is digital can actually deliver that.
Needless to say, these websites today have a lot more information about us than just our names and phone numbers. But unlike earlier, when it took an enterprising Kirana store owner to transfer this information, most of this data today is being handed over by us. But how much of this is by choice? Tune in tomorrow to find out. In Mumbai, Kevin Lee.
All right, on that note, let's take a quick break. We'll have all the currency and commodity market action coming up for you next with Manisha Gupta.
Welcome back, and first day of the week, and we have almost everything on the screen trading in the green. That's because the US dollar index is trading at a 3.5-week lows. That, of course, is the major reason that you have buying come back in many of these dollar-denominated commodities. In any case, it has been a bit of an oversold situation, and we are looking at bargain buying, especially for the metals as a sector. Joining us now to talk about gold especially is Adrian Ash. Adrian, hi. The gold prices, the kind of declines that we have seen, and to come back to a 2-week highs as we trade right now to almost above $1,260 per ounce, $1,263 on your screens right now. So it's almost a 1 percentage point of gain in gold and silver both. Weakness in US dollar, of course, is one part of it. But would you also see some buying finally emerging here?
I think gold had got ahead of itself coming into the spring. I think, the highs that we saw in May clearly the physical market, if you look at the big consumer countries, China and of course India, demand was not there at those prices. The problem that we have for the summer ahead in gold in terms of fundamental demand and supply is that because the rupee has been weak and because the Chinese yuan has also been weak, this drop in gold prices hasn't come through for consumer countries as cleanly as it has in dollar terms. I think we are seeing some interest now. I think currency volatility has slowed down. I think the dollar, as you say, has retreated a little bit. So that means that now gold prices are lower in rupees, gold prices are lower in yuan than they were over the last 2 weeks. So we are seeing that. I mean, obviously, India has gone to a slight premium over the last week, as I understand it from our contacts. Chinese demand, I think, is a little bit higher, but it's the summer. It's going to be boring. And I think, with the floor now at, 1235, 1236, both in this month now and also back in December, I think gold looks pretty solid above that for the summer, but unexciting over the next couple of months.
You're choosing your words quite right there, Adrian. But at 1263, what is your sense? What is the range that you see gold prices moving within? Do we see 1280 before we see 1250 again, or how are you trading?
I mean, I can't give you a view on that personally, tick by tick. I mean, where do we go from here? I think it is, as I say, it's very boring, and I think it'll be interesting to see. Because of the U.S. holiday last week, because of Independence Day, the data from the CFTC, the U.S. regulator who looks at positioning in U.S. COMEX gold and silver derivatives, that has been delayed until tonight. So we're going to see what last week, as prices fell hard, what were hedge funds doing in gold and silver. Now, we know that they will have been going short more than long, but how much? Where did they get to in silver? Are they net short silver now? The same is true of platinum. I mean, platinum has been absolutely atrocious over the last couple of weeks. We had a 14-year low on a heavy, heavy sell-off in Tokyo futures last week. So I think, we have maybe reached an extreme of negative sentiment. And as I say, I think it'll be interesting to see what the data say tonight. If you look at U.S. ETFs in gold, both the GLD and the IAU, the big U.S. gold ETFs, they have shrunk. So money managers, professional money, has become disinterested in gold. It's tiptoed away. Gold has failed to perform so far this year. If you expect it to be a hedge against trade war, if you want it to be a hedge against geopolitical volatility, gold apparently doesn't work. And so I think that has created an opportunity at these lower prices for longer-term investors. But
are you calling it a buy? Are you calling it an accumulation level?
I always call it a buy. You know that. Gold is always a good buy. But is it a good price at 1260? Yeah, it's better than it was.
But are you picking a favorite here, Adrian? I mean, as you said, it has been extreme negativity that we have seen for all precious metals. So are you picking a favorite between a gold, silver, platinum, perhaps?
I think platinum is very, very interesting at these prices. I think, it is always easy to say, oh, it's a contrarian play, and platinum has become only more contrarian in the last 12 months. But the kind of volatility that we've seen, I think the shakeout we saw in Tocom last week, I think this could potentially be marking an important level.
Fine, taken, Adrian. We'll let you go at that. Thank you so much. Really appreciate you coming by and talking to us about all of those precious metal prices. So a personal favorite with Adrian clearly is platinum, but we have seen a good amount of rebound in gold and silver, both of them trading at a 2-week highs in Asia and Europe right now. Kishore Narne from Motilal Oswal as well joins us to talk strategies there. Kishore, hi. Let's start with gold and silver itself. And even as the global markets did see a lot of decline, the Indian gold prices are 5% up in this year, thanks to rupee depreciating by 8% as well. But at these current levels, with the inauspicious period behind us, do you see buying now emerging?
Manisha, I think it's a bit early to jump into this rally, but I think definitely we are on the solid ground at this point of time. One thing we should observe is that the dollar index has been correcting against all the major currencies, including emerging market currencies, for the last week or 6-7 days. And I think that is one thing which is a factor which is pushing up the gold prices at this point of time. But as you look forward, I think eventually what you see is a trade war which could trigger inflation, which could also the geopolitical situation pushing up the crude prices. I think crude and trade war actually in a combination is a highly inflationary scenario. So in that background, I think longer term looks much more promising, but I don't think this is too early to say and judge that a longer term bull trend has started. But definitely looking at that, short term buy is definitely on the cards. So anything close to 30,650 on MCX is a good buy, with 30,500 as a stop loss for short term and 30,870 as a target for traders.
How are you looking at the silver? Because we've come back quite a way. We've gained quite a bit of a ground here, back around 40,000 rupees. What's your sense on that?
Again, I think the currencies have playing a major role here, both in the base metals front as well, and the dollar denominated prices as well as the rupee denominated prices also. I think that's where we're getting some strength, which is silver is much more beaten down compared to gold. So short term, absolutely, even this is a buy. So anything close to 39,900 is a good buy opportunity for silver, and short term targets could be 40,270, which can be extended to around 40,400, 440 levels as well.
Kishore, you mentioned about the base metal prices, and today has been a good day. Almost everything is trading in the green, including the ferrous metals also. Is it the bargain buying? Is it, markets finally off the trade war, the first trench of it, because we've seen that come in? How would you put it out?
I think it's just a short-term pullback. I'm still not into an aggressive bull position or aggressively long on base metals. I think there is some more weakness expected to come on dollar. So the dollar index, whenever it is going down, of course all the commodity prices will start to rally in dollar terms, as well as where we have domestic fundamentals of India being much more weaker. So the rupee might not get the dollar advantage. So rupee might remain flat or slightly appreciate. So overall we have a double advantage of rupee as well as dollar. So I think short term, again, it becomes a case of currency play rather than a commodity play. So I think copper, one can look to buy at even current levels or 434 odd levels, and 439 could be a short term target for copper.
Crude oil prices, one thing interesting is that the spread now between the two varieties is just about $4 to $5. Is there a trend? Is there something to look into this? And of course, while all the other fundamentals remain constant, because we haven't seen any more changes come in there, how wouldn't you want to trade this?
See, crude, I think it's crying loud and saying that it's extremely tight in the market. So if you see even just WTI, I think the backwardation is now close to around $2 from the near month to the second month. So I think that is extremely bullish scenario. So by triggering Saudi to produce more, again, if you see historically, Saudi has never produced more than 11 million barrels for a long period of time. So it is extremely difficult to actually go to 12 million barrels time. So it's really fictitious to see that. So I don't think Russia will go and push more oil into the market at this point of time. So the spare capacity is very limited. It is only on paper it is 2 million barrels. Actually on practically in the market it is not there. So I think that is one thing which is driving the prices up. The backwardation is showing that physical demand is significantly higher. Cushing inventories for WTI are at a 3.5-year low. So I think it's a good case of bull trade here. 5130 short-term target for MCX. 5200, 5300 could be possible for this weekend or maybe next week.
All right, Kishore, good to have you on a Monday. You've given a buy call on all the commodities starting the week there. Thank you so much for joining us for your strategies. And with that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.